So on. Yeah. It's just going to be a fake out and then it's not going to go down. Maybe it will. We'll see. Yeah, it looks like it's rolling. Come on. Come on.
Target
All right,
filled.
that's target one. We're going to a break-even stop now. And just because I'm really concerned that this is going to rip right back into my face.
Stop filled.
Okay, good. That was a very aggressive trade considered how far down we were. And the fact that we've got, the bottoms here over to the left. Yeah, it looks like it's working, and maybe I just got faked out, whatever, but I took the conservative approach and took money off the table. Got us 18 ticks. It's already hitting target 2. Let's see if target 3 can be hit. There's a primary pivot down there for target 3. It's already broken through that 73.85 level. And yeah, and there's I've got a blue line from Friday. Let me share it on everything. And that's where it is, and it's having trouble with this 73.80 level. So, target 2 was about all it was going to get, I believe. And there's the trailer up here around 86.5. And that's about what we got. Let's see. I got 91, so I didn't even get to target 1. But anyway, I'll take that as a starter. And let's see what happens from there. Good morning, John. Hope you guys having a great weekend, everybody. And let's see if we could close out August and then this week and next, with a bit of a bang. Heaven knows that I need it. It's been August is always fairly tough, but I made a few trades that I'm probably not the proudest of. We did hit target 2, but we can't get below target 2 in the NASDAQ. It's basically flailing there. The S&P's in limbo land. The Dow is trying to pull back a bit. It's in a grind higher mode, not going much of anywhere, and the Russell's in chop. So we're in chop city in most of the stuff except the NASDAQ again. We do have a short there in the Russell. I don't see how in the world. We've got a shelf here at 98, another shelf down at the 97, and another one down at 95.5. So again, it's right back into chop city. The only ones that look a little bit encouraging may be the Dow and the S&P, but let's see what happens. Here comes the bounce in the NASDAQ. I'm having some performance issues here on my computer. Actually, it's not my computer, it's Thinkorswim. All right, getting a rollover again in the NASDAQ. Anybody else having performance issues? Hey, thanks, John. Appreciate that post. Anybody else have any performance issue with Thinkorswim charts? It's taking nearly a minute to draw charts for me. Yeah, we look like we're trying to hold this bottom around 73, 76 in the Nasdaq. Way to go, John! Woohoo! And the Dow's up at that high, grinding. Nasdaq's got to get over 80, 73, 88 or so before it'll get into even a bit of a rally. Not seeing anything here. And crude oil, I looked at it a little bit earlier before you guys got here. Yeah. It broke out over 65, ran back up to about 65.20, and then stopped for a little bit and ran higher again. So nice. Okay. Chop in the Russell, chop in the Dow, chop in the S&P. And it looks like it'll rally a little bit in the S&P, at least it's attempting to. Still got to get over the highs of the day, really. Give us some going. Nasdaq's trying to tease people. See how that gold is doing there. Now that short 92.70, that's what I had a sell. Boy, there's a lot of congestion over here to the left. It dipped down to 92. Watch the stop. Okay, yeah. Coming back in your face. Looks like Nasdaq is trying to get up to that swing high. Is the Dow going to be one of those little grinders again today? We don't have much in the way of stops 93.70. Okay. Yeah. Oil and gold are two that take, I'll say, intestinal fortitude. I want to say something a little more crude, but it takes some going to be able to trade those. You've got to have iron stomach. But when you get moves in those, they go. They go. There's the Nasdaq rolling over again, and we got a new sell signal right there. The R squeeze looks okay. We're right at the primary pivot, and the momentum oscillator is not really conducive, but you can't have everything all the time, I guess. It is the weakest. Pulling back in the Dow. Russell's attacking its lows as well. Looks like it's trying to break through that swing level. This is the second time down here. And the R squeeze and oscillators look okay, not great. All right, looks like you're grinding higher again. See what happens if you get down to 92. There's a gray, what's that, a get in sync mode? I'm not sure what they call it. Hardly ever get the gray signals. NASDAQ is battling with that primary pivot. I'm not sure that primary pivot's going to hold. I like the 50s, the 200s, the 20s, the pivots I show really normally, unless they're supported by price levels, that they're just temporary holding pattern. And now it goes rollover. So be aware of them, that you'll get a reaction at it. But that in and of itself, that you're at some sort of pivot level, does not mean that's where it's going to stop or and reverse. Russell did not follow through to the downside there. It's trying to figure out which way it wants to go. The gold, it's really not wanting to go anywhere. Russell looks like it wants to resolve itself to the downside. Below 98, the Russell could be shorted though. Possibly. Looking for a signal on the Russell. NASDAQ did roll over. It did go right through the pivot the second time there. Let's see if the Russell follows the NASDAQ brother. This would be the third time down at this level for the Russell. All right, I'm going to come off of gold. I need to watch the S&P. Sorry about that. And S&P's trying to hold. Russell really trying to battle this area here. We've got prior swings to the left. That NASDAQ short again. We're not going to get another signal in the Russell because these two shorts over here are still active. Well, no, they're not. This one over here actually stopped out at a really tiny profit. The price column. Yeah, it sure is. Yeah, but because you've only got 30 stocks, David, so yeah. When you say price column, are you talking about down here at the bottom on my oscillators? You're not talking about price, are you, Roger? I'll wait for a follow-up. If you're looking at these numbers over here, there is no color code associated with it. It basically, that yellow will match on this Russell will match the yellow line, and the little light blue line will come there. Red is the zero line. Not the bottom, up and down the right edge. Well, you're not being specific enough to me. If you're talking about, are you talking about right here where you're talking about the price column here? Over here on the right? I don't understand, Roger. said up and down the right edge. This is the right edge, but there's right edge is a pane. The first pane is the top pane. This right here with the oscillator is the second pane. So can you tell me what pane number you're, P-A-N-E, so I can kind of understand. This is number 1. That's number 2. And that's pane 3. And if you're talking about these over here, that's just price. Now if you're talking about these colors, they just match the indicators here inside the chart. Okay. Russell's in. Okay, the top pane. Are you talking about the numbers here on the right, or the little, I'll call them the road signs that are color coded? The 73, 71, 75 matches that vol stop. That's all it does. And the green line, the green sign there matches the green dot, which is the counterpunch trader trailing stop. And then the black one there is current price. Well, they kind of look like road signs in Germany anyway. Boy, that NASDAQ is weak. And the Dow's finally pulling back. The S&P did a dip down and looks like it's trying to come back up. The bulls are trying to step up. All right, John. Did you actually go short gold again? Or is this from the first trade? So watching ours so much I lost track. Okay, thanks. And I really appreciate John and anyone posting their trades out there. That's very, very, yep, 92.7. And that's, it's extremely useful. We can watch what other traders do. Let me zoom on over here. I think you're using 1,000 ticks or something like that. I'm going to stay on the 3-minute because it's easier for me to flip back and forth. Oh, 800 and 2,400, okay. Do they vary by day? And obviously by instrument, based on the volatility. The NASDAQ here looks like it's only getting down to targets 1 and 2 mostly. But target 2 here, it really went fully to target 2. That's 61 ticks. Target 1 and this one doesn't look like very much, but target 1 there was 41 ticks. Now the stop on it was 52. See, so one of the problems I've got here is just a reward to risk ratio. And the ratio is fine. I just couldn't stand if it. I couldn't let it go all the way back with 2 contracts to the stop point. So I have to pass on the trade. S&P grinding lower. All right, free trade now. Love those. Russell's bouncing. The Dow's at the high of the day. Go figure. David H., do you sell upside cover calls on your Costco holding, or you decide not to do that? Coming up towards R1 on the Dow. Right in here. Target 1. Target 1's 33 ticks. And looks like it tagged it. Thank you, David. I bought and sold on this holding probably at least 4 times, if not 5 or 6. The first 4 made me money. The last one I know of, I had to buy back to keep from. What was the time before last I had to buy back, but this last one I made a little bit of money on it. All right, looks like the rally mode here in the Russell. Here comes a rally in the NASDAQ. It finally got back over to primary pivot, but it's going to run into resistance here. I'm loath to go long. Rally again in the S&P. I'm going to have to step aside for a couple of minutes, and I will be right back, folks. David. John, sorry. Other David. And we're doing little bounces here. The Dow is right there at R1, grinding higher again. I wonder which stock inside the Dow is driving that one. Will the Dow stop and pause right there at this R1? Don't know. Russell. Nasdaq's doing a zigzag pattern right around the primary pivot. Right in here. Aggressive trader could go long right here and be looking for about 80, 83 to 85. The momentum and our squeeze oscillators are both favorable. Would be a counter trend trade though. Well, define the trend. And that Dow's trying to pull back. The S&P's kind of have a little bit of trouble with this 1193 level. Sorry, that's gold. S&P would be 2800. Yeah, just got to bounce it around. Chop City and the S&P. Pull back in the Dow. Pull back in the Russell. Anybody else besides John and I take any trades today? If so, please post them out there. Hard pullback on the Russell. Really hard. Looks like it wants to attack that low of the day. Well, the regular trading hour low. 1697.5. Let's see what happens when it gets there. NASDAQ pulling back as well. We got another short signal in the NASDAQ. While I was sitting here looking at the other We should get a reaction at this level on the Russell right here. A little bit of a bounce on the S&P. I don't see the trend supporting the short in that NASDAQ yet. Okay, Art, good luck. Well, the slowness in the charts in Thinkorswim has gone away. Whatever they were having trouble wise. And there goes that Russell. It did a little bit of a bounce, but nothing that really showed up on the chart. Russell's probably headed 16 to 93, 90 half. This 1695 looks like that's where it wants to head to. I'm a little bit out of sync on that one. I should have been all over that one. Oh well. Thank God there's always another trade, right? We do have a sell signal down here below where we're at in the S&P. We're grinding lower in the NASDAQ. That short is working. We went to target 2 and got very, very close to target 3. May still get it. That target 2 was 48 ticks. As I said earlier, the dollar risk amounts on all these trades in the NASDAQ, and in fact, most of them are just huge. The Russell here that I'm looking at, that wasn't so bad. That was only about 19 ticks over here. This one right here was 24. Just the NASDAQ is pretty high. The Dow, it was 43, which is pretty high. Looks like the Russell is trying to at least bounce a little bit here. I won't call it bottom until it gets about to 97. S&P tagged that, looks like it tagged that entry. Or maybe it came close to it, but didn't get it yet. Kind of hard to see there. Don't really know whether it got it or not, but got close. And bouncing. NASDAQ trying to bounce. Russell, not so much. FOMC minutes at 2 p.m. on Wednesday. Could be a market mover. I will point out since we opened it, I'll disregard this first one because it was right at the open. The trade signals on the NASDAQ. Let's set the color here. That one was a 2-target winner. This one right here. Cancel. This one right here. Those three, all at least target 1 winners. There's a target 2, there's a target 1.5, and there's a target 2. This right here was anticipating the breakdown. Even if we got it a little late, we could have gotten in there. This second one in here wasn't a bad entry, and I missed it. I missed it. And this one worked, but I don't really like the setup there. Did I have any other targets, John? I took, what time was that? 9:41 to 42, so I was right in here. I have 15 and 35 as my targets. I hit 15 on the short that I went short on. Let's see. I went down. Let's try this. Okay. I went short on the break here. Got my first 15 ticks. And, oh, sorry. Let's back that up. Let's zoom in a little bit. All right. I like to play the breakdowns, and I applied to play swing levels. So I went short at that level. I got the first target and was happy with that. Okay, so let's go. So I went short on the breakdown. I got my first target, and then I went to break even. And it just got up there and took me out of the trade and then rolled over. Let's draw that in green. It did this. One could say that I got a little bit too aggressive on the stop. So what I do is I have a standard setup with 2 contracts. The first at 15, the second at 35. And find that that's where I start from. I do try to get either target 1 or 15 so that I can basically be on a free trade. Because if I get 15 on that first one, it's got to go to 15 on the other side, move 30 ticks against me before I have a losing trade. Now, by going to break even that quickly, I guarantee at least to have a winning trade. But as you can see here, let's look at it again. All right, I should have anticipated a retest of this level, because when the indices go through that level, it usually tries to come back and retest it. Normally, though, it will go down here and then come back and retest it, allowing me to get to my follow-on target. This case, we normally come down and test, and we kind of wobbled here and then went down, and this is the second time down through a swing level. Second time down through that swing level, I don't need a bounce. Okay, because I've had the bounce over here. But a lot of times within one candle or so, inside of one candle, it can come all the way back up. Now, the volatility on that one was from it basically, let's take it in and zoom in a little bit. I'm sorry, okay, 940. All right, here we go. All right. Now, that right there, come on. That right there is the trade within a, yeah. I warned about that, and that's another thing that happened, Mr. John K2. With us, we had such a big move on Friday that the follow-up usually is either sloppy, choppy, or muted. Now, except for the NASDAQ, we're pretty much muted. What we do here is that I tend to try to take my money and profits quickly and early. And maybe that's just a bias that I've got and can get me in trouble. Well, get me in trouble. It actually is there to keep me out of trouble. Hey, no problem. I mean, that's what we're here for. I want to teach you not to be able to need me here. I want you to be able to show me some trades and help me, help all of us. So that's the whole idea. With this trade right in here, come on, you grabbed the wrong one. Okay, so the short, I went short right at this level. And, well, maybe I probably went short at this level. Okay, 941. All right, and it went down. There's target one. there's target 2, and there's target 3, all generated by the NetPicks Counterpinch Trader. I used to trade on a 6-tick candle. You saw what happened here is this thing went down and it bounced back up. Now I'm going to go down to an even smaller, I'll call it time frame. It's not a time frame. It's it's candles. Let's zoom on over here to 41. And man, that was just, oh no, it's that one. That's not it. And I was short at 73.91.75. 91. All right, let's change that one color so we can see it. Line. Instead of cornflower blue, I'm going to make it orange red, and I'm going to make that a 3. All right, that's where I was short. And notice how it went down, hit my first target, and it immediately came back up 2 or 3 times, but then followed through. Again, we're on a Unirinco 4. There's no way I trade a 4 Unirinco. I only did this just to show you where the candles are. It basically came back to the breakout level. And then retested it and said, now kiss it goodbye. I used to trade until we got to the high volatilities. I used to trade on a 6 Unirinco. And the 6 would have got us a break. The break would have been, come on, baby. Just trying to grab. Now the break would have been around 93, 73.93. And notice that it would have tagged target 1, and then it did its bounce. And it would not have taken me out because I'd have been just on this side. Now, where could we have put the stops? Well, originally, let's not do it that way. Let's do it this way. Yeah. That right here has to, when I go short here, that up here, the swing level has got to be my stop. If I can't take it all the way up to there on my initial entry, if it's too wide, I have to find another technically supportable level, and there is none in between. So what I was really counting on was this to be momentum and immediately run to the downside. All right. I was counting on a big runner quickly and not bounce against me. And a lot of times what happens if they get below these levels here, they'll come back up and they'll basically be a fake out breakdown, and they'll come right back up and run forever against you. Especially with the other markets not being weak, only the NASDAQ, and on a Monday where I expected it to be after a very strong Friday, for it to be somewhat wishy-washy. So I traded my plan. Get to target 1, weekday, set it to break even plus, and if it takes me out, so be it. Well, I guess looking back on it, I could have probably set on this one, it's a Unirinco 6. That's where the target should have been, the stop should have been, then there, then there, then there, then there. And this Unirinco would not have stopped out. It would have made full target 3, or the trailer would have been between targets 2 and 3, which is normal. Let me figure out what that was in ticks. Now, target 1 says it's 24, but again, we probably, let's go here. Because this level right here, we probably would not have been able to go short until we got down to 73.91. That's kind of where we got short to start with, 91.75. So somewhere in between these two was probably where we could have or should have gone short. And notice what happened. It came back up. It didn't reach, it reached target 1 and then it came back up and then came back and rolled down. So it probably would have taken me out regardless of which one I was in, unless I used the calculated or average to range volatility stops. That's the only way that I could have stayed long. Now, I'm not sure, John K2, if you're new here today, I'm going to spend a little bit of time then explaining the volatility stop because it's not in the write-ups. The green dots that you see here, this is the one that comes out of the NetPicks. Oh, welcome. The NetPicks Counterpunch Trader. It does its own calculated stops based upon once it meets a certain number of ticks, 10, and it'll start moving the stop down. All right. And basically moves it down to the signal line minus or plus 2. So now the orange dots are what is called a chandelier stop, but all it really is a fancy name for a volatility stop. And I like those probably better because I can get those regardless of whether I get a signal, because I sometimes go long or short and I'm not following the Counterpunch Trader system. I'm doing it on my own. And I need something to help me determine where the stop might want to be. Now, let's go here. All right. Let's say we do go short at some level here. And we get 15 ticks. It says that immediately going short, I should be lowering my stop to about this level once I hit target 1. And that target was about 15 ticks on my entry. So I should have had to stop up there instead of down here. Well, the problem is, the difference is, and I got stopped out right here, it looks like. Or maybe on one of these other candles, I don't know. There we go. Trying to figure out the time. 42:13. 42:13. Did it stop it right here? Gee, no. This doesn't look right. I think the timestamp's wrong there or something. Because it said I got stopped out at 73.91, which would have been up here. And that time doesn't show 42 something. Anyway. The problem is to stop here from, let's call it 91. 73.91. And up here would have been 97. Okay. And I would have to give it 6 points times 4 equals 24 ticks. Well, my first target over here was only 15. I would have had to get more than target 1 And I found that a lot of times, since I'm getting in a little bit later, I'm waiting for confirmation, I have to take 15 instead of the 20 or so that they have calculated. I can't go all the way back up to that stop level there without it turning into a loss. Let's just say that it did this and moved all the way back up here, which they can do quite often. They poke their head down below a level, get a whole bunch of people short, and then rip their lips off. Then I would have had, if that had happened, and I've seen it happen, it's happened to me, I'd have been minus 9 ticks on the trade. Now, it probably would have dropped it a little bit here, so this 9 would probably have turned into a minus 6 or something like that. But I'm not going to let a winning trade turn into a loser. My trading plan has me going short at a level and having to stop, hitting target 1, and if at all possible, and I've got a couple of candles down, which I did, go to break even plus 1, break even plus 2 on the trailer, on the second one. Then I lock in at least one target, 15 ticks, plus 1. So I'll have a 16 to 18 tick profit built in. Now, most of the time, these should go down and do a little bit of a retrace. And what you normally like to see is a break below. Let's start again. And I've got that in the presentation. What I'll do is I'll give you a link out to a YouTube video. Normally what it likes to do is it'll break down below these levels, bounce back above them, and come back down. And second time down, which in fact is here. There's our break of the level. In fact, this is the third time down. We came down here and bounced. Came down here and bounced. Came down here a third time. That's why I didn't wait for the zigzag. Zigzag is a J-hook, which is my favorite pattern. It works in everything. Now, I fully expected this one to continue to do a runner. And it did, except because of the volatility, it dipped its nose on the other side, dipped its toes on the other side of that breakdown, and rallied up to kiss it goodbye. I did not anticipate that. Not based upon these momentum indicators. But it was within one candle, all within it, just basically Mexican jumping beans. Now, could I have taken it instead of a break even? Well, I made it break even or break even plus 1 or 2. Could I have taken it instead of minus 24 ticks? Could I have cheated a little bit and taken it a little bit on the other side of where my buy signal was? See, I was long, say somewhere around in there. Actually, it was a little bit below that, but okay. I could have put it on the other side of that by 1 or 2 ticks. If I'm going to get that close, I may as well dip it on the other side so I get my commissions back. Because 90% of the time, if it takes you out there, it's going to go on the other side of your buy point. Because the markets, oh, sorry about that. Just slung my hands. The markets have no idea where we're getting in. And frankly, if they do, they wouldn't care. We're getting the NASDAQ going down again. So, bottom line, I traded my plan. The plan didn't work perfectly this time. Oh well, stuff happens. Get over it, Steve. Yeah, I'm not having fret over it. Just explaining to you what I'm doing there. And we're just kind of chopping along here. This is pretty wild swings of chop, but it's mostly a chop. S&P down at the lows. Dow's pulling back, and the Nasdaq looks real. Sorry, Euro. The Russell is down at this primary pivot, and it looks pretty weak too. Let me go out there and find a YouTube. That's my YouTube channel. Okay, in there, when you go to videos, there is all right. Here's a presentation. I'm going to give one live here on Thursday, but I gave one last week that I recorded here. And buried inside there are the basically 6 patterns that I look for. Those are the primary patterns I look for. They're really 3 patterns long and 3 patterns short. They're basically reversals of each other. So if you want to take a look at that, that'll explain a lot of what I'm all about here. And if you have any questions, feel free. Did you get in later and probably didn't? I'm not sure where I got the Unirinco. Hold on a second. There's my chart setups. Okay, my chart setups are there, and then reversal times. And then there's future symbols, monthly codes, and tick values, and something about futures brokers. So those are in the lower right-hand side of the documents folder in our lower right-hand side of the chart. And you asked the question, Mike, about where you can get the Unirinco bar. Whoa, the Russell is really, really trashing itself now. While I was doing that, we missed an entry here. Okay. NASDAQ, not so. I was monitoring the NASDAQ, but I wasn't monitoring the Russell. Okay. Let me see if I can find out where I got the Unirinco. It may have been from futures.io. Well, no. Sim22. Yes, I think I got it off of futures.io. Now, I don't know whether it's in the paid section or not. If you send me a private message with your with an email, a good email address, I can send that over to you. It is a zip file. I'll have to use WeTransfer.com, but I'll be happy to do that. All right. I need to step aside for 1 minute, and I'll be right back. Gotta recycle that coffee. No, there's nothing up here, Stitchy. No, not today. Sorry. Nothing for doggies. Not today. You got all of them earlier. Let's see if I can move the car real quick. What do you think? Move, please. I hate you doing this on Mondays. Okay, I'm back. Roger S. No, Roger, I can't do that. And here's the explanation. You should be able to see it directly on the chart. All right, this is the NASDAQ chart. All right. Put it on pause. This green one right here that you would ask for an explanation, it goes along with that color coded with that green dot. That's an volatility stop. That right there is the price. Now let's let this go a little bit and see if we can get. So they change. They're not all the same. They match what you see on the chart. All right. Now we've got the green dot. That's the volatility stop. See how it's changing. The black dot is where. Sorry, the black is where the price is. Let's wait until we get. All right. See where the red dot just appeared? What does it match? It matches the exhaustion dots from Counterpunch Trader. So all you have to do is look at the colors, and the colors match what you see on the chart. So I really shouldn't have to explain it. It ought to be self-explanatory. And I'm not sure, but I think I took the color codes off for the swings. Let me look indicators here. See, I usually tend to take a lot of those off. Now, the ones I leave on are the ones that I really need to be able to see, and I don't have control over the exhaustion dots. But if I were to put on the swing levels and put the price markers and apply those, see how the blue one gets over here? And see how the orange one gets over here? Those are now the swing levels. It gets so busy over here, I usually take them off because I don't need it. It's an approximation. I can't control the green dot and red dot, though. I have no control over that. Otherwise, I'd get rid of those. Most of them I don't really need. So visible. See, because I know that this is right here. These are the dots, and there's a green, darker green one in there that I can't show. We're in chop. That's all we are. Mike Stam. Are you still here? I'm going to send you a message here. Also need to know whether you have NinjaTrader 8 or not. Oh, there you are. Finally popped in there. Do you have NinjaTrader 8? Before I send anything? Yep. Okay, great. Yes, I am. You can do that. You can actually, there's a dot. The problem is that's a proprietary indicator combo, and I don't have total control over everything within it. If I turn the markers off, I think I lose everything. So I just put up with it. You're welcome, Mike. Guess I need to pay more attention to the markets here. Okay, Mike, check your inbox. You should be there. And Nasdaq's in chop. Now the Russell's taken over from being the weak sister now. Doggone it. All right. That's the Dow. There's the... Notice how we got down to a level. Let's zoom over here. You see how we got to basically this. There were 2 or 3 levels from last week, right here at 1695. Excuse me. And then we went into a consolidation mode. And you'll see that also in the presentation that I gave last week, and I posted in the YouTube video. That's one of the patterns I love. Come on. There's Peach Puff. All right. That consolidation, and we broke either above it or below it. In this case, it's a continuation move, which is what I said is the vast majority of the time when you get into one of these things and you go into consolidation, when you break out in the same direction you entered. And that's what it did. That would have been a nice short with that kind of stop up here. And it came up with it later than we would have gotten in. And we could have gotten ourselves a really nice run. Would have been a full winner for me. Woulda, shoulda, could have. Okay, just pay attention and you won't have to worry about it, Steve. Roger, I'm not trying to be a turkey about not putting the color codes on there, but we really don't need them. They're there. Okay, Mike, good luck. And Nasdaq's getting weak again. I got a gray signal right here at about 67.25. Don't know if it's going to follow through or not. We're getting up to, boy, is it 11 o'clock already? Wow. Usually by this time of the day, we've had a pretty good rally or sell-off in all of the markets. Right now, we're getting a grind lower in the S&P, kind of a grind in the NASDAQ if you just don't look at the price, but look at the moving averages. We had our sell-off, and it was in Russell. And the sell-off is trying to happen in the Dow. I do like where the momentum and R-squeeze oscillators are. Don't like the fact that we have swing level below us at 08, but that doesn't mean it won't. That's what, 19 ticks lower. Maybe we get a rebound here in the the Dow, back up to the 73, 79, and then go lower. Can't enter here though. Where would the stop be? A lot of times this last few weeks with the volatility the way it is, the counterpunch trader system is getting signals after we've already passed above or below the entry level. So we need to be able to compute our own and not depend on some computer system to tell us what to do. We need to follow the same logic, but don't wait necessarily for the candle to finish and then miss out on a trade. All right. And looks like the Russell's trying to bounce up to the primary pivot. All right, I am looking at the markets overall. I'm going to bring over my Thinkorswim charts. One of the reasons that we're having trouble, one reason is that we're trying to digest the Friday moves, the Thursday and Friday moves. Number two, we're at pretty close to the swing high here at 28.60. We got to it and pulled back. NASDAQ is down 33. It's pretty weak. I did mention that in our pre-market review. I really was a little concerned about that one in the Russell. And in the Russell, it's going sideways, so it's not so bad. And the Dow's up all of 58 points. But it's above our 3-month high, but not the 6-month high here, and definitely not the all-time high over here in January. So I would say we have a bifurcated market, but it's not bi, it's a trifurcated market or quad. You know, they're all on their own page. I'm probably going to give her another 15 minutes or so, and then we're going to call it a morning. Looking back on it, I got a little distracted with could have been, well, let's put it this way. I didn't get distracted. I kind of talked myself out of a couple of trades. That one. The second one is a no-no. There's no way that it should have been traded. Oh, sorry. All right. And I did trade that first one. I just didn't. I got stopped out. Got an aggressive stop. Second one I should have been in. This one right here, there's no way I should have been in based upon where the pattern was developing. And really no other trades today in the NASDAQ. Now, on the Russell, it's a different story. While we were over talking about some of the other things we got, we got a break here. And where did we think it would go? Probably down to this level. It turned out to go a little lower. In fact, I have it marked over here to the left that would have been a consolidation based upon Friday. And sure enough, it went there, the consolidation. This would have been a decent move. And we had maybe 2 opportunities, maybe just 1. So in the major markets that I'm looking at, I didn't see anything in the Dow. I don't trade the S&P. Didn't see gold. Didn't see. Let me answer that one in a second, John. And so the idea here is we really only had 3, maybe 4 opportunities, and we got 1, and we followed the plan, and it didn't work fully. Of the ones that I was actually watching, I got 1 of the 2. All right. John asked the question, why not open a room at 8 o'clock or, pre-market news? The pre-market, all right. I tend not to want to trade news events because you get lots of whipsaw activity. And if you're in the pre-market, a lot of times you're playing with the black boxes. You're not playing with humans. And I'm never going to be able to play against the black boxes and win. They have way too much information and too many things on their side. They have no commissions. They're instantly fast. I just don't have an edge there. Where I have an edge is the flexibility within regular trading hours. I have considered doing that, especially for, say, a Thursday report where we have coming up, what is it, let's see, there's the economic calendar. All right. Nothing occurred today. Nothing occurs tomorrow. Red Book, I don't buy that. Existing home sales during regular trading hours, FOMC trading hours. We're going to trade the petroleum report on Wednesday. The Thursday job reports and stuff at 8:39, that's a possibility. And maybe even durable goods. But I usually have enough opportunities during the day to trade regular trading hours only and make the quota. I've never really examined the other hours. Maybe we ought to give it a shot. I'm open for that. It'll take some significant changes in my life and my wife, but yeah, looks like the NASDAQ gave a buy signal up here. Kind of tough to be taking this one too with the overheads. Let's see though, 63, you got 3 or 4 points and it's kind of a counter trend, but I don't know, you can take it. Well, you know what the 9 o'clock open is also? Crude oil. That could work. But that means we'd probably really have to open up around 8:45 so that we could do a review of the markets before we got there. But and 11. Now the 11:30 is where Europe closes. I normally say 11 o'clock, but you notice it's after 11. I'm still here. I'll be here. I won't initiate new trades really after 11 because it's just kind of getting too close to. Well, were you here, John, at 9:15 this morning? I reviewed the markets in about 10 minutes. Okay. If you're here at 9:15, I go over the markets. And I don't record it, but, because it's after it's there. I look at the dollar and tell you where it's going, only because it's a backdrop. Probably doesn't matter so much. I'll go over crude oil. Here. I'll tell you where crude oil is and where the big picture is. I'll tell you the big picture of the S&P, gold, NASDAQ, Russell. Art insisted that I cover silver. Silver just follows gold right now. Both of them are in the toilet. Go over the Dow. I'm going to ignore the transports. I do cover the U.S. 10-year because people want to trade the bonds or whatever, but we're in a nosedive. People are fleeing to safety at the moment. Now, this could be people from overseas. It could be the U.S. people. It could be both. Don't know. Could be actually foreigners like China. And I go over the VIX. And then, after doing that, looking at the one over the world at daily charts, then we go over the 15-minute charts of the S&P, NASDAQ, Russell, Dow, and maybe the crude oil. Yeah. I'm a trader, not an investor. They say buy when there's blood in the streets. Not when you're a short-term trader. Although you could probably sell. Now, John Smith actually traded. You're welcome, Fred. John Smith was trading the gold short today. And I think did pretty well. I tend not to trade gold. I've had my head handed to me a few times. Yeah, so after we opened regular market hours, as you can see, this is a 3-minute chart. I've not played around with any Unirinkos. Nope, that's way too high. Here's a 377 tick chart. I guess you could probably play that. There's the consolidation level here around 940. It broke below it. It went down to the next swing level and stopped, and it did a zigzag. You could probably have played gold. What happened to crude? Oops. Is crude still on September? I think so. And that was last week. This is all we've had on a 377 tick chart. There is no volume in crude oil today. And there's no volume, you don't want to be trading it. Because the amount of movement could be horrific in one candle. There was a long signal here, but heck, the stop was almost $1 lower. What was it? 50 ticks. $50 lower. Sorry, I lied. I can't trade that. We'll trade it on Wednesday. And I don't trade the ES because I can get enough trades usually in the NASDAQ, the Dow, and the Russell, and they have $5 per tick. They're usually a lot easier for me to control the risk in dollar amounts. All right, folks, I'm going to call it a morning, and we will see you guys tomorrow morning at 9:15. And maybe I'll think about on an exception basis starting earlier, but I'm not so sure. I'll have to take a look at it, go back and look and see if that's worthwhile or not. Again, this is our room. It's your room too. Any suggestions, by all means. But if I did trades like that in the morning, they would be in a sim mode and not in real. I would not be taking real money to trade those to start with. All right, you guys have a wonderful day. We will see you tomorrow. Take care.